So before we begin, we have to talk about the candlestick anatomy theory, as this is the backbone of the market, which the candlestick anatomy theory, or CAT, is a framework that I teach where every single higher time frame candle is framed from a specific lower time frame structure. If we're anticipating a bullish candlestick on the day time frame, we look at the 1 hour to frame that structure. If we're looking for a bullish candle on the 4 hour, we pay attention to the 15 minute to frame that structure. The 1 hour, we look at the 5 minutes to frame that structure. The higher time frame candle is simply just an open high and low, but if we look at the lower time frames, we can gain additional context where we can see price open up, create a manipulation, tapping into a point of interest relative to its time frame before finding support to go higher or lower. On this day time frame, all you see is an open, low, high, and close. Right? There's not much you can learn from this, but if you look at the lower time frames, which is this 1 hour structure, we can clearly see that price opened up, came lower, taking out this level of liquidity, these previous lows, plus tap into this level of support, and then we can see price pushing back higher and higher, establishing this high before coming back lower. And same thing for a bearish example, where you can see price open up, come higher, take out this level of liquidity, plus tap into a level of resistance on the 1 hour time frame, before then seeing this move to the downside. The three phases that we want to be paying attention to is the accumulation phase, the manipulation phase, and the distribution phase, also known as AMD, which are the footprints of the market. Looking at the daily candlestick here, the Asia session will create the accumulation phase between market open to 12 a.m. Eastern Standard Time. The manipulation phase will usually happen during the London session. Sees this drop lower, finds a level of support to then break to the upside, and the distribution phase will happen towards the end of London session, going into the New York session, where you can see London session ends, and in New York we see this rally to the upside, closing out the day. Same thing can happen here, where the Asia session will accumulate, create this low, and then the London session will come lower once again to come back into that Asia session range before then finding support to push higher. Usually we want the low of the day to be established during either the Asia session or the London session for that manipulation move. As well as, how do we know a low is established? Well, price has to tap into a higher time frame level of support or level of resistance. So in this case scenario, the Asia session came lower. Let's say it tapped into a 1 hour order block, tapped into this 1 hour order block, and then it saw this breaker structure to the upside. This is our indication that price has found support at that order block level. So during the London session, we get this move lower back into that Asia range. We can use it as support to push higher. In this example, we can see the Asian range made this push lower. The London session comes lower once again, creating this manipulation. Let's say it taps into a 1 hour fair value gap, taps into that fair value gap, then we see this push higher. Based upon this retracement, we can gather our longs, reaching back above higher prices. In the New York session is simply a continuation where we can see London session create this low, seeing this push higher. So New York session anticipate retracement for a continuation, retracement for a continuation. The first model is the London session manipulation, which the London session is between 2 a.m. to 5 a.m. Eastern Standard Time, and this will create a manipulation where one of two things will happen. Either the London session will create a manipulation to take out the Asia session high or low, followed by tapping into a higher time frame level support resistance, followed by a drop or rally. Or the Asia session will give a reaction higher or lower, then during the London session, price will come back into that Asia session range, reacting off of a point of interest, targeting opposing levels of liquidity. And what that means is either the Asia session will establish this high, or the London session will establish this high. In this case scenario, the Asia session established this high because we came higher. Looks like it reacted off of this long wick here, followed by this drop low, creating this 1 hour bearish fair value gap. So once price came back up into that 1 hour bearish fair value gap during the London session, which is marked out in yellow here, Asia session is marked out in gray. So during the yellow, price came back into that 1 hour fair value gap, a level rejection to then reach back lower. So this would be our London session manipulation. As the marketplace is going higher, tapping into this level of resistance, we want to be short. And when the marketplace is going lower, tapping into a level of support, we want to be long. The manipulation is simply just a fake move in the opposing direction, where many retail traders think price is going to continue going higher and higher, not knowing there's a level of resistance right there. This next example, we can see that the London session created this high this time. Asia session came lower, and then it found support to reach back higher. And during the London session, we can see it opened up and saw this immediate push to the upside. This immediate push to the upside came back up into this order block level. Price came higher, tapped into that order block level, and then we saw this rejection to go back lower into those Asia session lows. So whenever we established a high during the London session, our first area of targeting would be the Asia session highs or the Asia session lows. And in this next example, we can see we dropped lower here, and then we saw this break to the upside during the Asia session, leaving this bullish fair value gap. So as price comes back down into this bullish fair value gap, this is a level of support, we've already seen the marketplace reaching lower, and we have a bearish fair value gap right here. This would be classified as internal range liquidity, where we have a clear fair value gap that was left unfilled. So the marketplace is most likely going to come back to this specific level. So once we've established this low, followed by this break of structures to the upside, the overall trend of the market is shifting from lower to now higher prices. So once price comes back into this fair value gap plus order block, price will find support to reach back up into this unfilled fair value gap. This is known as an external to internal setup, where we came lower, took out external levels of liquidity, and we came back into internal levels of liquidity, which is this bearish fair value gap. So once price taps into this fair value gap level, you want to take the long stop loss below this low of the fair value gap right here, reaching back above higher prices into that bearish fair value gap, aiming for a 2-to-1 R. In this example here, we can see the Asia session create this high, taking out this previous daily high. Following taking out that previous daily high, we saw this drop lower, creating this last up close candle. This last up close candle is a bearish order block, right? So once the London session opens up and comes back higher into this bearish order block level, see how we're creating this wick here, wick here, wick here. This is signaling to us that price cannot break this specific level. Seeing that signature at this order block level is a good indication that sellers are stepping in, and we can anticipate a big move lower. And as you can see, after tapping into that order block, rejecting, we finally see this drop lower, reaching back down into this fair value gap level. Right, like we mentioned, external to internal. We have this bullish fair value gap that was left unfilled. Once we reach a level to where the marketplace cannot go higher anymore, price is going to come back lower into that fair value gap level to fill it in. And it even continues lower, taking out these previous London session lows. After taking out those previous London session lows, we see this push the upside. And the next day, we can see right here, price opens up, sees this push the upside during the London session. Right, this is the London session manipulation. Price just comes back to this rejection block, which a rejection block is simply when we have a long wick inside the marketplace. You always want to pay attention to those long wicks. So when price comes back into that rejection block, if we can look for this signature creating this rejection wick, where we can see price come into that rejection block, but it cannot continue higher. Instead, it starts rejecting back lower. This is a confirmation that price has found resistance at that level. So as we start seeing price come lower from that rejection block level, we can then frame our short stop loss back above that rejection block itself, reaching back below into, once again, this fair value gap right here for a 2-to-1 R. So the London session will create a manipulation, and during that manipulation, we want to be fading it. This manipulation was higher, tapping into this fair value gap. We faded it, going lower. This manipulation was higher into this order block, faded it to go lower, manipulation lower into this order block fair value gap, faded it to go higher, fade, lower, fade, lower. During the New York session, this is where we get our New York retracement, which the New York session is between 7 to 10 a.m. Eastern Standard Time, where we're anticipating London or Asia session to create the high or the low of day, and our main emphasis during the New York session after the manipulation happened following a break is to anticipate a retracement for a distribution. So we can see here during the London session, we had this push higher, and then after establishing this low here during the London session, we had this break to the upside. So during the New York session, we're anticipating this retracement back into this order block level, reaching back above higher prices into these previous highs. During this example right here, we can see the London session had this manipulation higher, followed by this drop lower, then we had this break higher. Then the New York session created this manipulation back into that London session range for a push back higher, back above these Asia session highs. And right here, we have the Asia session create this break higher, giving the manipulation lower into this order block level, followed by this push higher. And during the New York session, we had this retracement for a continuation. Either London will create a low and we can frame an entry based off of a reversal, or price will see a continuation. We already see that price is trending from the Asia session to the London session. Now coming to New York session, we're anticipating a retracement for that continuation back higher, as we can see reaching back above these previous daily highs. London between 2 to 5 a.m., New York between 7 to 10 a.m. Eastern Standard Time. During the London session, we want to be looking for the manipulation, where we want to be buying as the London session is going lower, taking out liquidity or tapping into a higher time frame level of support, or you want to be selling as the London session is going higher, taking out a level of liquidity or tapping into a higher time frame level of resistance. We want to be anticipating a retracement during the New York session back into that same level for a reversal back higher, tapping into a higher time frame level of support. Then we get this break higher. This is our confirmation that price is likely to reverse back above these London session highs, or we can see a trending scenario where we can see Asia, London trend higher. So during New York session, we're anticipating a pullback, for a continuation of that trend, targeting opposing levels of liquidity. And if you guys want the full PDF, I will be putting it inside of the PDF folder. We already have other PDFs from me and my brother Spec Trades, and inside of this free Discord community, we do have a free course from my brother as well as myself, plus trade studies, which you guys can watch for completely free, as well as a whole bunch of trade models that you guys can also watch. And every single day, we will be giving a daily analysis as well as trade breakdowns, which you guys will get for completely free, as well as you can share your trades here in the community, as well as talking to me and my brother on a consistent day-by-day basis. And if you want to join the completely free Spark Train community, it's going to be the first link in the description. We're looking at Euro USD here on the 1 hour time frame, and when framing my bias, I want to pay attention to where are my key support and resistance levels, where is liquidity inside the marketplace, as well as what has the Asia session done. So we can see the Asia session has seen this push the upside, taking out this previous high. Then after taking out this previous high, we saw this drop lower, creating this inversion fair value gap. So obviously we can identify here that the Asia session is bearish. Coming into the London session, we can anticipate price to continue going lower, right? But we have to pay attention that we do have this bullish order block below us, as well as we do have these previous daily lows. So we clearly have an area of support below us, plus an area of liquidity as the London session opens up. I want to see if we can get a manipulation back lower. I want to see if we can either get a break higher from this bullish order block level to take a retracement back up into these Asia session highs, or we can see a break higher after taking out this level of liquidity to essentially take out those same Asia session highs. Down on the 15 minutes time frame here, the London session is just about to open up. I want to see how to react after tapping into either this order block level or this liquidity pool. We can see price creating this fair value gap here, not necessarily a breaker structure just yet. We can see price finally taking out this level of liquidity. After taking out this level of liquidity, we can see we get this break back higher. This is exactly what we want to see. Price creating displacement, immediately leaving a particular zone. If price comes down into it and starts consolidating, that level of support is less likely to hold and probably is going to fail. But if we have a level of support like this, and then we immediately see it run away from it, this is indicating that as soon as price tapped into that support level, buyers were then met, and then we see this reaction swiftly to the upside. So we can identify this previous low as a strong low. It's an indication that we're seeing a market structure shift. So if we can see a retracement inside the marketplace, it should be back inside of this range to create a higher low, creating this uptrend. And what I can identify is this bullish breaker. And this is a bullish breaker because this is the last up close candle followed by this drop lower. So we had this original drop, then we had this last up close candle, then this continuation drop lower. So once price broke back above this last up close candle, price will now come back to this level as a level of support to hopefully reach back above into those Asia session highs. If we can see price come back into this breaker level, I want to take my longs, stop loss just back below this low, just in case we do see a deep retracement for about a 2.25 R. Price comes back into that breaker level, not trying to overdo it, not trying to shoot for the moon, just keeping things very easy and repeatable, because as long as it's repeatable, it's consistent. On our next example here, we're looking at USD JPY on the 1 hour time frame, and we can identify this 1 hour bullish fair value gap here. We also have a higher time frame level resistance above us in the form of this bearish fair value gap. So when we're in this position to where we have a level of support below us, but also a level of resistance above us, we want to be patient. We want to see, is price going to come into this fair value gap to immediately see price reaching back lower prices, or are we going to come back into this fair value gap, price struggle to break below, instead it could see a break higher to use it as an inversion for a continuation back above these London session highs and potentially Asia session highs. So when we're in this position, this is what's called low probability. And what you want to do here is you want to be patient and wait. Either price respects this level, sees a drop, or is price going to break above this level and you inverse it. Down on the 15 minutes time frame, obviously we can identify this 1 hour bearish fair value gap, but we do also have this 15-minute bullish fair value gap as well. So my main emphasis is I want to see how does price react after tapping into this bullish fair value gap. Is price going to tap into this level and immediately see a drop lower, reaching back below lower prices? Or is price going to tap into this level, see some type of rejection, indicating that price has found support here, which we can frame a bias to potentially break above this bearish fair value gap and potentially reach back above higher prices, which we could reach back above into this bearish fair value gap right here. When we're in this situation, like I mentioned, just be patient, wait for price to come to you, and based on that context, you want to then strike. Price taps into that 1 hour bearish fair value gap. We can see price tapping into that 15-minute bullish fair value gap. And this is actually a very good signature, because as price opened up, it came lower, tapping into this fair value gap, and it immediately left it, closing with this bullish engulfing candlestick. So this is indicating to us that price tapped into its fair value gap, and it was not willing to go lower or break below it. Instead, it was actually willing to push higher, coming back into this fair value gap level. Like we mentioned, when we have a level of support and resistance, if price is hovering around it for an extended amount of time, price is more likely to break above it and potentially inverse it, right? We came into this fair value gap once, twice, three, multiple times, and we're coming back up into it once again. So price is most likely going to break above this level. I'm going to put my entry at this fair value gap level. Stop loss just back below this previous low that tapped into that fair value gap, back inside of this bearish fair value gap above us. Price comes lower, taps us in, and we can see price immediately sees this jump higher, tapping into this bearish fair value gap above us. Perfect. So that's going to be it for the video. I hope you guys got a lot of value from this video. Make sure you guys click that like button, subscribe if you haven't already, and comment what you guys want to see next. And if you guys want to be mentored by me and my brother Spec Trades and want us to hold your hand until you become consistently profitable, click the link in the description and join the Spark Trade University. That's going to be it. I'm Arkham, your new mentor. Be safe.